Because we just purchased these tablets and the tablets are of a fixed asset nature, we need to record them somehow within a system. Now, businesses today often have a separate fixed asset software system which is a part of their accounting system where they track their fixed assets. But Warren Sports Supply does everything with paper documents. So what we need to do is we need to look into our Systems Understanding Aid within the basketball and turn over to page 42. On 42, you should see something that looks like this at the very top, which is for office furniture, which was purchased from Chicago Office Supply, which has an estimated life of 5 years. It's being depreciated on a straight line basis. It's located in the office, and it has an estimated salvage value of 0. You notice this record. This is an asset record which shows that this particular asset was purchased on September 30th for $50,750. And its book value on the day it was purchased was the same, $50,750. On December 31st of 2011, we recorded depreciation on this asset. Now, normally when you record depreciation and you're using straight line, you would divide the whole amount, $50,750, by 5 and come up with a dollar amount to record each year. However, this Warren Sports Supply uses a different method, where in the first year they take half of a full year's depreciation. So a full 5-year depreciation would mean 20% each year. If you were recording half of 20%, you would record 10% in the first year. So Warren Sports Supply is recording 10% of the balance of $50,750 in the first year for depreciation. When they put that in, they put it in the credit column for depreciation record, and the total amount of accumulated depreciation is that balance column. And the book value then got reduced to $45,675 at the end of December 31st, 2011. I should note up here that the salvage value of this thing is 0. At the bottom, there's an area that allows us to talk about the disposition of the asset. So the disposition of the asset can be listed here as well. I just wanted to go over with you what the fixed asset subsidiary ledger looks like. Now, we just purchased something and we are going to add it. So if you'll turn over to page 43, at the very bottom, you will see a blank space. This is where you need to list in the tablets which were purchased. They were purchased from Chicago Office Supply. 5-year estimated life, straight line, going to be put in the office with 0 salvage value. Therefore, the first line needs to show that date, the same date you just used in your purchases journal. And the debit amount needs to be the same amount as the amount from the purchases journal, which gives you an asset net book value, which is the same amount as the amount which you purchased. So it basically is going to replicate what you see in front of you here for the September 30th, 2011 entry, except you are going to have a different amount, and that's going to be the amount you paid for these tablets. You will not do depreciation at this time. I just wanted to give you a kind of a heads up as to what we do with depreciation while we are talking about fixed asset. Your December 31st entry, which you will be doing, will be done as an adjusting journal entry, and it will be done on December 31st of the year. However, we are not there yet. We have not finished all our transactions. So your item on page 43, at this point, there should be just one line completed, and that should show a debit, a balance, and an asset net book value all equal to the amount which you are showing as the purchase value of those tablets.